Hi, everyone. I wanted to spend a couple minutes talking about Section 179, specifically for our 2021 tax year. Since the majority, well, really that whole presentation is very current, so the information in it did not change. However, there are some adjusted numbers for 2021 as far as Section 179 goes. So I wanted to make sure we were using those current numbers in a discussion. So I actually have your book active, and really this is what we can use to talk about Section 179. Section 179 expensing, first of all, Section 179 is the code section that allows this to happen. And expensing is truly that. It is immediately expensing of long-term assets that meet certain categories. And this has been around for a really long time, like back in the 80s, 1980s, they even had this. Your book also discusses bonus depreciation. Bonus depreciation is something very new. It only came out maybe in the past 10 years. So we do have these two methods or two options. We could even use both options of expensing assets immediately. Now, bonus depreciation you must take or you have to ask to be excluded. Section 179 is optional, so you don't have to ask to be excluded, and it is really up to the company if they even want to proceed. Now, what is eligible? And that's important. You must have eligible property. It's really all tangible personality property that's purchased, new or used, during the current tax year. Okay, so there are some, you can see it here, it's noted right in this section here, off-the-shelf computer software and some real property may qualify for Section 179, but for the most part, it's tangible, does not have to be brand new, it could be new or used, purchased in the business this year. So it doesn't apply to any purchases from prior years. Qualified property does not include property with prior use by the taxpayer. So if you're the owner contributing property into the business, you're not allowed, if you're used it for personal purposes, you're not allowed to take Section 179. Okay, so the first thing we do is determine, do we have any assets that meet this qualification? And we total them. So I like this example, Teton's 2021 asset acquisitions. Computers and information systems, delivery truck, and machinery. These are all tangible personality property that qualify to be Section 179 expensed. Now, you are eligible to immediately expense up to $1,050,000 of qualified purchases in 2021, if you want. Now, there are some exceptions and limitations, and let's take a look at them. So assume Teton is eligible for and elects to immediately deduct $800,000 of Section 179 expense against the basis of the machinery acquired in 2021. Now, they could have elected to expense up to $1,050,000, but they only chose $800,000. So you do not have to expense up to $1,050,000. You're eligible to. So what is the amount of Teton's current year depreciation deduction, including regular makers and the Section 179 expensing? And they elect out of bonus depreciation. So please take your time and read these problems very carefully. Well, first of all, the machinery is $1,200,000. They're going to expense $800,000 of it. And then they're left with $400,000 that has not been expensed. Since they're not going to expense it under bonus depreciation, they are still allowed to now calculate normal regular depreciation on the remaining cost that has not been expensed, or $400,000. So in the year of acquisition, you could take Section 179, and if there's a part of the cost that you did not expense, you can calculate regular maker's depreciation. for total depreciation of $857,160. Now they could have elected to deduct all $1,050,000. Okay, so this was just the scenario that this company decided to take. Something else. Next year, when you calculate depreciation expense on this machine, you'll use the second year depreciation rate for a 7-year property, 24.49, times 400,000. It's the part of the cost that is not expensed that could still be depreciated under your normal makers tables. Whoops. Sorry about that. Okay. Now, let's go to the next scenario. Assume Teton was eligible for and elected to claim the maximum amount of Section 179. What would its total current year depreciation deduction under makers in Section 179, assuming the half-year convention applies and Teton elects out of bonus depreciation? So the assumption is that they're going to take it on the machinery, 1.2 million. So they immediately can expense as depreciation expense under Section 179, $1,050,000. That's the maximum for 2021. But then the remaining basis, the part of the cost that was not expensed, can be depreciated regularly now over the life of that machine. Okay. Now, so that's how Section 179 works, but there are some limitations, okay? So you are allowed a maximum of $1,050,000, but once your qualified property purchases placed in service during 2021 are over $2,620,000, your maximum allowable Section 179 decreases $1 for every dollar of qualified property above $2,620,000. So let's see how this works. Let's assume instead Teton placed into service 2.4 million of machines, 920 of computers, 80,000 in delivery trucks. So they're qualified property children. We're not saying all property. We're saying the ones that qualify for Section 179 expensing. So if there was any real estate being purchased, we'd ignore it. How much qualified property did they purchase in total? 3,400,000, which is above the threshold of 2,620,000 to get that maximum deduction. They could still maybe take Section 179, but that 1,050,000 is now going to decrease. So what we do is we determine how much was the qualified property purchases above the statutory amount of 2,620,000, $780,000 more. So they are not allowed of the 1,050,000, 780,000. So their maximum expense amount they could take this year is 270,000. Now again, what I just mentioned, assume that Teton acquired and placed in service a storage building costing 400,000. Would this change our answer above? And the answer is no, because a storage building is not qualified property for purposes of Section 179. So in this case, so you know, up above here, if they decided to expense 270,000 of the machine, okay, or they wanted to take Section 179 the machine, the most they can take in 2021 is 270,000. And remember, you can only take that Section 179 in the year of purchase or placed in service. Okay, now, oh, let's get the whole enchilada here, right? So let's assume the same facts as in 1012, where their maximum 179 after applying the phase out is 270. Also assume that they want to use all 270,000 as Section 179 that they are going to use against the machine. Assume further that Teton elects out of bonus depreciation and reports $400,000 of taxable income before deducting any Section 179 and depreciation expense. Okay, because if you recall, Section 179 cannot create a loss in your company. Okay, so let's take a look here. So they can deduct $270,000. All right. Now they're left with $2,130,000 of basis. So the assumption here is that they've recorded depreciation, whatever they're going to do with their other assets, and the only thing left is the machine. Well, if they take regular maker's depreciation on the remaining basis, 14.29% of $2,130,000, they can deduct an additional $304,377 as depreciation expense. All right. So now where do we stand? Well, at this point, the company's income is $400,000. The first thing we do is subtract that depreciation we just calculated of $304,377. Sorry, I'm using my desktop calculator. It's like I've never used one. They could take that this year. Now, their taxable income is now at $95,623. The most Section 179 they can deduct this year on their tax return is $95,623. They could still take, quote, $270,000, but only $95,623 is deductible this year. Where does that excess of $174,377 go? To next year's tax return. And that's what they talk about here. Okay, so it doesn't mean you don't get to take it ever. It's just that this year, because the income is limited, so you deduct all other depreciation and get your taxable income amount. And then say, okay, which is great, which is less, my taxable income amount or the total amount of elective Section 179 expense, $270 or $95,623. Well, the lesser is how much you can actually take this year. And if there's any excess, it carries over to next year. Okay. Okay, let's take a look. This is just choosing which one you want to take, and then they get into bonus depreciation, which is covered in the lecture. Okay, so I just wanted to go through those various parts of Section 179 and make sure that you understand how we apply them for 2021. So please make sure you post any kind of questions to the discussion board. Thanks.